Hey guys, I just want to bring up an opportunity for resource investors. If you want to rub elbows with the big wigs and talk to companies directly that are handpicked by Rick Rule, well, you got to be in Boca Raton from July 7th to 11th for the Rick Rule Symposium. The event has become a premier event in the mining space, and they're going to have some pretty big speakers like Robert Friedland, Sean Rusin, and the great Rick Rule. And also, we're going to be there. You can meet the deep dive team in person. So if you're interested in rubbing elbow with some of the biggest heavy hitters in junior mining, check out the link below. Good afternoon, everyone. Today I'm chatting with Kimberly Ann from Lahontan Gold. Guys, I find Kimberly very fascinating to interview because she's been behind various junior mining companies that have actually built mines. In addition to that, she's also worked in the private business world where she's used to having 100% autonomy over companies, and now she has to come to the public markets and do the whole storytelling thing while being pulled in 1,000 different directions from various stakeholders, which is a real challenge when operating a publicly traded company. So in this interview, we get into Lahontan Gold. We also talk the general gold market and where Kimberly thinks the price of gold could be heading. And we get into, if you were an investor in Lahontan Gold, what can you look forward to over the remainder of 2024? All right, everybody, enjoy the interview. Kimberly, thanks so much for hopping on here today.
Thanks for having me.
So we got to start off talking gold. Over the last, say, 6 months or so, gold has had a pretty nice run here, hitting as high as over $2,400. I'm not sure how much you follow the general gold and the macro environment, if it's just noise for you, or if it's something that you actively sort of monitor and assess. What's your read on what's happening right now with the gold market?
You know, I think I follow it very closely because I'm absolutely fascinated by it. I live in California in the States. So our favorite big box store, Costco, is selling gold bars. And every week I try to go get a gold bar and they're sold out like within days because they get them at a spot price and 3 days later they're worth X amount more than what they were 3 days before that. So it's seeing the trickle down effect of the geopolitical world we're living in right now and what gold is doing, you know, on all levels, and having people literally run to the store like it's COVID again, buying gold bars at Costco is very interesting concept. But yeah, I mean, I look at gold and silver right now as the biggest safe havens you can put money into. And I think as more particular to what we have, we're a junior mining company. So I think we're still waiting to see the massive triple down effect to what's going to happen with share prices and all that, because we're still the junior high risk profiles. But you look at the BHPs of the world and the big dog companies, they're doing quite well, but I think it's a very exciting time. I don't think it's going down anytime soon. I think we're going to see a stabilization of maybe another $100 above where we are now, and people are going to continue to buy it on a physical and investment standpoint.
Over the last year, it as I said, the price of gold's done well, and particularly ever since COVID started, we've seen it really run. Mm-hmm. But just from somebody who's monitored the junior markets, I noticed that there was a lot of money pouring in that sort of first summer of COVID in 2020. We had sort of a rush from retail investors and some institutional investors that want to put money in, and then it kind of died off. And it just sort of feels like over the last 6 months, we've recently had this run. But from sort of watching the news flow, there hasn't been a whole lot of financings. There hasn't been a whole lot of money start to pour in yet. There's been some, but what's your read on it from your Rolodex or inbound with Lahontan Gold? Is there a large amount of interest picking up? Are you receiving calls from institutional investors that are now starting to kick tires?
Yes, to every question you just asked. So, for example, last week we just closed a $3.5 million financing. Green Shoe was filled. We had the book filled within 14 days. We have, Beacon and Haywood that does analyst coverage on the file. Canaccord backed us up in the brokerage space. So yeah, I mean, I think, I always say you can't make a project better. You can always fix a company on like a management, structural level, but when you have a great asset, it's still going to shine through even in the worst markets. We chose to raise this $3.5 million because it's going to get us to a very advanced point, which is not very much money, Canadian dollars, especially when we work in US dollars, but it is going to get to us to a pivotal moment for our company with our permitting, our plan of operations to build it next year, our PEA, another round of drilling, et cetera, et cetera. These are, big things that we're getting done. So when I'm calling up institutions and investors that work with me that have had part of my businesses for a very long time, they said, "Oh yeah, you're doing XYZ. Yes, we'll give you money." So I think the right projects in areas where jurisdictions aren't too scary with teams that have a proven track record, they do still, people still put money in.
So it's the first time we've had you on. If I may, what's the high level overview of Lahontan Gold?
Yeah, so Lahontan Gold, we have fantastic assets in the Walker Lane. We have a past producer from 1988 to 1992 that was mine. Open pits called Santa Fe. It's our flagship asset in the Walker Lane, the best jurisdiction still to be in the world. But what's exciting about it is we can fast track it back into production. We published a resource of 1.7 million ounces last year in January. We have since added to that. We haven't publicly put out those numbers, but in September, our goal is to put out a PA on this to show, the economics of this, the mine life, the payback, et cetera, et cetera. But what's exciting that people really need to think about when you're looking at a project is we have infrastructure. We are still considered a mine under closure, which means we have a $500,000 bond with the BLM that we have to every quarter for the past 30 plus years monitor air and water quality, of which, when you're starting from ground zero to build a mine, you're not doing that. So we're already a few steps ahead from that standpoint. Also, we have 3 wells on our property with all the water access. We have a substation on our property where the admin site was in 1988 to 1992. So when you're thinking about, how you're going to build this, well, the admin site's still going to go next to the substation. The pit walls in the Santa Fe pit have been sitting there, 50-degree pit walls for over 30 years, looking beautiful. So you're not going, gee whiz, what should this look like? So a lot of the risk has been taken out of our project. So really, we're just fast tracking this back into production. It's a very simple story.
So as you just mentioned, earlier about the 3,000 meter drill program, at this stage, what's the goal of a drill program? Is it to just kind of get those last pieces in place before going to raise project financing? How much more drilling? Obviously, I know you don't have a crystal ball and you don't know what the results are going to look like, but how much more drilling is going to need to happen before you can get to the point where you're talking about project financing?
Yeah, that's a great question. And we did choose to do this round of drilling specifically because our last round of drilling that hasn't been announced yet, we had tremendous success out of that. And we realized if we just drill a few more holes here, we can make the pit deeper in our conceptual pits. And it's just going to add, just a more robust number for people to see in the marketplace. But we still know that, when we go to build this, the CapEx is going to be under $100 million. But those are our internal numbers that we look at and try to figure out how do you even get to over $100 million. It's not that much money to be raising. So what we understand is if we can have our PEA being the best PEA that people see in the market, then it really kind of gives a better picture for everything that's going to happen. I think last week we announced Kappas Cassidy, the best metallurgist firm in the world that's doing our PEA, met with them last week. We've all agreed that, because this project has been mined for 4 years, heap leach for 6, we don't need to go back and, do a bankable study on this. The PEA with a lot of engineering in the background is going to be enough to go to project financing. And I know what you need to see when you're going to project financing, because I used to work for Waterton, a very large debt fund. And so I know what the backside of that looks like, of how you're going to find that money. So we have optionality when we're going to go out and raise the project financing next year. And it's still, at the end of the day, when you're talking about mining, it's not a lot of money to be raising for the project.
So when we looked into your background, you were with Prodigy, who famously had the Magino project, which was then bought out by Argonaut Gold. And then a month ago, that was taken out by Alamos. And now I find these stories really fascinating, just because you have a mine that gets to production and then gets halted, and then there's all these issues with it. And I know a lot of that happened after you were involved. But you got to see a project get basically to the finish line under your leadership. I'm curious, what did you learn from working with Prodigy and the Magino project that sort of navigates your thought process today when you think about junior mining?
Well, that's a long answer to that, but I will tell you, Project Gold was a brilliant story. The background was that it was Kodiak, and it was over promoted, and the company was kind of in a troubling state. And Brian Marr, my business partner now, said, this company, we need to find another asset. And we have some great banking partners that helped us find the Magino project. And in fact, our geologist, he's a very famous geologist, said, looked at the project, because this used to be an underground mine. This is a massive open pit. And we were fortunate enough to have the markets where we had $70 million in the bank. We got the asset for $20 million. It had a $20 million credit to go back into production. I personally rebranded the entire company. We drilled, I think when we first got the asset, we have 1.6 million ounces in our main resource, and we drilled it out to almost 7 million ounces in only 26 months time. Took it from a 25 million market cap, sold it to Argonaut for $340 million. So from the business, I'm a business person. So from the business standpoint, it was a fantastic success, but we also did have a lot of great things in play. We had a lot of analysts paying attention. We had bankers paying attention, and we had a fantastic asset in a great jurisdiction. So yeah, it was a great story. I actually left as it was getting bought out to Argonaut and negotiated it, and then got a fantastic offer to work at Waterton and help them build their business. But it was really proof of the pudding when you have a great asset and you drive the business, organically, but responsibly through giving out the message and doing the work on the ground. It really does come to fruition, and it absolutely did. And I'm so excited it's now in Alamos' hands, because I think they're going to really run with it. But you never know with these projects, right?
Now, Kimberly, pre-interview, we were talking about how you were involved with various private companies. Now, I find this fascinating because you run a publicly traded company with Lahontan, and I always think about how you got all these different directors, shareholders, stakeholders, and they're all pulling you in different directions. Now, I'm curious, let's just say theoretically you sold Lahontan Gold for $500 million tomorrow, and I brought you a new project and said, Kimberly, I would love you to be the CEO of this company. What are the things you'd think about in terms of properly running a new publicly traded company to make that scenario such that you'd be happy to get involved with a new publicly traded company, knowing what you know now?
Well, everyone always accuses me of being a serial entrepreneur, which I absolutely am. My favorite game in the entire world is Monopoly, and I always want to put assets and people together and build things. And there's no, I don't need a title or an ego or any of that involved. I just want to move projects along. And I think my greatest asset when I worked at Waterton was they were actually new to the mining space, and they didn't realize that the junior mining space is, I don't want to call it shady, but we have we have a lot of CEOs that maybe just aren't that qualified to be CEOs. Just because you've been in mining for 30 years doesn't mean you should be a CEO. And I was literally born a CEO. My whole family is, we have very successful businesses. And when I got into mining, people say, well, are you an engineer? Are you a geologist? And I would kind of joke, like, do I look like any of those things? No, I'm just a business person. I just know how to make money. Do you want to make money, or do you, like, it's just really not that hard. So I tried it when I take on mining. One, when people say to me, Kimberly, would you please be on my board? One, I don't have a lot of time. And since this whole ESG thing has been so important, I get called all the time, and I don't want to be someone's token female on a board. I want to bring value to the situation. And I always look at, like, well, if the project's great and I can get involved and make a difference, then I can show up. But if I can't make a difference, and have my voice heard and help, move it along whatever, whatever scale of proposition we're talking about, then I just don't want to do it. I want to get up every morning and get excited about what I do. So I am pretty tactical about projects I take on, because there's I just don't look at it like a paycheck. I mean, I own 9% of our company, and I don't work for my paycheck. I work for the end game and what's going to make my shareholders. I've built 3 mines since Magino. So I didn't try to build these mines, but somehow I'm involved with building mines. But this one, whether I build it or someone else builds it, it's not really the point. It's about making money for our shareholders and putting it in the right hands if it's not my hands, at the time that it's, getting delivered to the market on a different level. So, I don't know if that really answers your question.
I gotta ask, you built 3 mines since Magino. Are we talking about gold mines here? Oh, geez.
Copper, gold. So this is my first public company besides working at Magino, working at Prodigy. I really don't like being in the public space because on the private level, you can do so much more without regulations. It's not like it's just expensive and all that. And I've had a lot of projects in Peru, and you can get a lot of things done more on a local basis. And you can build stuff quickly, like building houses. It's not as complicated as we like to make it in our United States of America or Canada. So yeah, I like building things. I like putting companies together.
So when you think about building mines, is like the Santa Fe project that you guys have with Lahontan is a Oxide project. Is Oxide something that excites you more than, say, your typical hard rock conventional mining project?
I don't mean to be shallow, but money gets me excited, making money. So Oxide is the easiest thing to extract. It doesn't cost very much. We already have an open pit. You're heap leaching. It's accessible. So yes, I mean, it's what people understand, but this project is so excitingly complicated in that we have massive amount of sulfides underneath these pits in very high grade. And I'm talking, I think a couple of years ago in August, we put out a press release of like 4.5 meters of 110 grams gold. I can't remember what the silver content was, with visible gold in it. But people didn't understand that because it's in the sulfides, because usually that's underground mining. So what gets me excited about this project is the potential for like 30 years plus of mining it, because not only are you going to mine out all the oxides, but then instead of going underground, you're just drifting in because you're already basically at that level to get to the sulfides. And we have a lot of neighbors already mining I-80, for example. They have a roaster. They love sulfides. So there's so much opportunity, I think, especially in 10 years, like just trying to figure out what it's going to look like 10 years from now in Nevada. The sulfides are going to be a really sexy part of the story that people just the general market, I don't think, understands, because it's just a different processing, concept, et cetera. But yeah, we're going to mine the oxides. We know we have millions and millions more ounces that I can't, publicly say we have this, but we're going to get this in production as quick as possible so that when we keep drilling, it's on our dime, not the shareholders' dime, to get it, to that next step as far as how many ounces really are there in the oxide. And then we'll get to the sulfides later. So this Santa Fe story is going to go on probably way after you and I retired, that's the exciting part about it, right?
I got to ask you about historic drilling, just because as a retail investor, and when I look at a project, it's something that I can point to and say, hey, that amount of money's been spent on the project, which is kind of funny. We had Lee Courier from NextGen who found obviously the Arrow deposit, which is one of the greatest mining discoveries in the last 20 years. And he said to me, he'd rather have a project that doesn't have any historical mining on it, which kind of blew my mind. I can understand why he would think that way. I'm curious. Firstly, how much historic drilling has happened on the Santa Fe project, and then I'd like to get your thoughts on that comment as somebody who's built a bunch of mines. How important it is that you have historic drilling on a project before you decide to take it on.
So I understand why he would say that, because there's usually a liability that comes with all of that. But the mining side of things, we are fortunate that the companies that had this asset before us did very, very good work on the reclamation work. In fact, we have we've gotten awards for our reclamation work on our property. So we're very fortunate from that standpoint. There's a lot of assets that, you're taking on liability when you're taking on a past producer. But the best part about our asset on top of that was we inherited like 1,250 drill holes, 110,000 meters of drilling. We inherited so much. It was literally overwhelming storage unit of like hard copies of it. And I hired one kid out of school, UNR, to just scan all this in to get it digital for us because it was so much data. But what it did was I literally turned to the team and I said, okay, guys, when you drill, if you miss, you're in trouble. Like you go work for somebody else because you have a plethora of data to tell you where to drill. This didn't get shut down because there's no more gold and silver there. It got shut down because gold went to $340 and it was 1992. And then it got bought out by Homestake and they reclaimed it because in their mind, it was a small project. Like, economics, every project's closed for various reasons. So there's lots of ways to look at these type of things. But this particular project, we're very, very fortunate in that it was taken very well care of and they managed to make money even in those terrible times of gold prices. And we have so much data that it's really helped us move the project forward. When we got all the data, we gave it to a third party and said, tell me what I have. And he came back and he goes, well, you have 923,000 ounces to start with. And this is a third party telling me this that built our MRE. So I was like, that's a pretty good this is a good starting point because most people thought, no, they stopped mining because there was no more oxide. Well, guess what? I disagree. So for us, it's been a fantastic thing. But I get both sides of the fence. It just depends on the project and where it is, and how well it's been taken care of, right?
Yeah, it sounds fascinating to hear that we got a company here with a $10 million market cap Canadian. I know that's probably not a perfect number, but we'll just say throw that out just to give us a nice round number. Yeah. I don't know how much it would cost to drill out 110,000 meters today,
oh yeah, oh yes, and you asked how much has been spent project wide. As far as the drilling, it was over 52 million Canadian dollars. I don't know what the exchange rate was back then, but I mean, a lot of money has been spent on this, which was actually quite hard when we were trying to get the companies together forming it just because of attorneys figuring out how we deal with all the money that's been spent in taxes and all that stuff. But no, a lot of money has been spent on this project.
I have to ask you about the cap table of the company just because it's junior mining. You know how shady this space can be in terms of deals are put together where the founders give themselves a bunch of cheap stock and then they just wait for something to happen and blow out shares. It's just part of the nature of the industry for, unfortunately, a basket of companies that are out there. So whenever retail investors are looking at a stock that's trading, sub 10 cents, they're going to be wondering, okay, if I buy shares, am I just making exit liquidity for some deal guy or deal girl? What can you say to retail investors to give them some confidence that if they buy shares in the market, they aren't just creating exit liquidity for a deal person, and that they are buying into something that is a real effort to build a project, and they can feel like they have a good shot here?
Really, really good question. So this company was not built around that model, and there's a lot of those models. This was actually formed out of fantastic relationships. The last company I had was called Latin America Resource Group, a private company in Peru, copper gold assets. Sold it within 23 months for a 15-fold for our shareholders. We did one round of financing, I think we raised 2.5 million, and our CF was in, and then everybody on the board of Victoria and management, just friends of ours, going, yeah, we'll throw money at that, Kim. That sounds great. And after we got that closed, it was literally PDAC right at COVID 2020. Is that 2020? John McConnell and I had a nice lunch to celebrate. And he says, Kimberly, I have one project left in Nevada, because I don't know if you knew the Victoria story, but they have their mine in the Yukon, the Eagle Mine. But they also had like a huge presence in Nevada, and they were selling everything off to build their Eagle Mine. It was $500 million to build that thing. And he came to me, he says, look, I'm stoked that you did so well on this. We did keep one asset in Nevada. Would you be willing to form a company around this? Now, my dear friend Brian, who's my business partner from our Project Gold days, Magina Mine, we have a private company with assets in Nevada, and we have teams that we do turnkey operations for different foreign business companies that want to work in Nevada that don't have visas and people on the ground. So we do all that work. So John knew that we had some great assets in Nevada that we could form a company around. So Brian and I put in 2 assets, and Victoria Gold put in Santa Fe, and we put a $10 million valuation around the company. 80% of that went to Victoria's shareholders because of how much money has been spent on the project, as we spoke about already. And then $2 million went to K Gold. If you look up a chart, that's myself and Brian, my business partner. And we're completely locked in. Like, nobody can sell shares. We're all committed to the company. There was no free shares given out. In fact, $5 million of our own money has gone into our assets that we put into this company personally. So this was really, wrapped around having fantastic relationships with business people that want to build a company together. Now, for our market cap right now, I don't like to look at it as whatever share price we're at right now, because if anyone's, a smart investor looking across the board at different companies, and you can do this matrix all over Nevada. It doesn't matter if you're trading at 10 cents or $1. If you look at the same year timeline, everybody's kind of still doing the same, drift down, or now we're kind of starting to build back up. And ones that were 100 million market cap, yeah, they're moving up a little higher because of, where they are on the food chain. But when we went public, we couldn't foresee the future, obviously. The markets it did a downturn right after we went public. And I do believe you do keep stocks that you've had in your portfolio for a very long time when you're emotionally committed to them. And the markets were terrible. So what's the first thing you sell? The new thing you bought, or Rob McEwen's stock you've had for 5 years, and it's Rob McEwen. So you're going to keep it to see, because it's going to turn at some point. So I do believe, as much as we all love gold and, all our companies, it is still an emotional market. And so right now, this is why I'm so excited about raising the money that we just finished, because we don't actually have to go back to the public to raise equity financing. We're going to be talking about project financing, which is debt. And we don't have any, we have a very small royalty, but we're very royalty light, as I like to say. So we could add a royalty if we chose to. But what I'm just trying to say, I'm not saying I'm doing that. What I am saying is I'm giving optionality in the fact that I'm not going to go raise another $20 million in 4 months and dilute our shareholders more. I don't want to be diluted. I put money in every round personally to try to keep our ownership up because I love this company. So it's not one of those companies that you're speaking about. This is actually built on fantastic relationships. And it's also one of those kind of security things. And if the markets turn terrible and I need another $1 million for, the company, and I could literally call up Victoria and say, hey guys, you want us to throw another $1 million? We'll just put some money in together and maintain, where we need to be to get to the next milestone, whatever it is. So we have flexibility. And I think by Q1, people are going to see something completely different than what they're seeing now. But I do think they should be buying right now because it's not going to get any cheaper. And the trend for all juniors are going to continue to go up.
Well, Kimberly, I think that you're a fascinating CEO. We've interviewed probably, I don't know, well over 200 CEOs over the last 5 years, and I find your track record to stand out in the junior space, and I love your approach to how you think about junior mining, and I really appreciate you taking the time to hop on here today and tell us the story of Lahontan Gold. And we'll be watching it, and hopefully after you go and you get that big project financing, you'll come back on here to tell us about how you guys are pouring some gold bars.
I would love to. Maybe you should come out to the project. We could do a live pour together. That'd be awesome.
We'd love that.
That'd be fun. Thanks for your time. Appreciate it.
Thanks. All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.